Good Thursday morning, Market Chameleons, and everyone join us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared screen, the disclaimer. Be aware, Market Chameleon, Dimitri, myself, none of us are registered investment advisors or a broker-dealer. If you're searching for advice, please, on securities, please reach out to a broker-dealer. This show is for informational purposes only, concern the Market Chameleon product. With that, D, you ready to get going?
Yeah, good morning, everyone. Let me share my screen here. Quick note, if you're joining us for the first time, Will and we do these shows in the morning to try to help answer questions you guys have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube. Will's keeping an eye on it, and he'll let me know, read them back to me. And to give you a couple minutes to put those questions in, we're going to start out taking a look at the pre-market report to see if we could get insights, what's going on in pre-market hours, and then we're going to move on to our questions. So up here, you're going to see the pre-market report, and we start out up top with this calendar view, and this allows you to go back to historical data if you wish to click on it or bring down a calendar, go back, see what happened in a pre-market on that particular date. We show the last week's worth of data up here from a summarized point of view. And this just allows you to kind of eyeball and scan if you see any particular trend, something unusual, or just want to compare today's activity to what typically has been going on. Today, we are on March 28th, and here we see we have 478 stocks that are trading higher in pre-market, 340 stocks trading lower. As far as volume goes, we have 112 million shares trading on up volume, 59 million shares trading on down volume, and if we convert that volume to dollar value, we have $1.2 billion worth of stock trading higher, $1.8 billion worth of stock trading lower. So that is a little bit of a mixed signal. We have more stocks that are higher, but the dollar value of the stocks that are lower exceed the dollar stock value of the stocks higher. So I would say this is, nothing very conclusive, pointing to one direction or the other in pre-market. Let's look at it from a couple more perspectives, then we'll move on to our questions. So I'm going to scroll down, and here we get a more granular view of what's happening in pre-market. We have stock symbols with price changes and volume, market cap, alerts. So here we have them broken down into three lists: our most active stocks in the pre-market, biggest percentage gainers, biggest percentage decliners. And I could see that on our count, 55 stocks made our biggest percentage gainers list, 26 on our largest decliners. So that points a little bit towards a more bullish bias in pre-market trading. Now, about these lists, we do set thresholds for the stocks to make it onto this list, because pre-market trading has less volume, less liquidity. So we do put in some thresholds to make it onto this list. However, if the stock meets those thresholds, it could make it onto this list, including small cap stocks. So you see here small caps. It could be an ETF. It could be a leverage product or an inverse ETF. So to narrow down this list further, we could use the filters above. If you have a watch list and you want to track a certain group of stocks that you're only interested in, you can filter this list by your watch list. We're going to use this filter here, an ETF. And when I click on it, you see different ETFs to select from. And we're going to choose SPY, which is the S&P 500 ETF. I'm going to click on it. and you see that the list below got filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. So that's what we did. We narrowed down this particular report to just the group of stocks that are members of the S&P 500. And here we see that 2 made it onto our percentage gainers list, 3 on our decliners. So again, that's just not really an indication of anything overwhelmingly bullish or bearish in that pre-market activity. We looked at it from a couple different perspectives, nothing very conclusive, but we did give it a couple minutes, Will, and I will take some questions now if you have them.
No questions, D. Have popped up.
Okay. I guess then let's go to SPY as our default. And, one of the things I'm going to probably, reference on a couple of our shows is just coming back to the multi-leg trades. And this just gives us insights on what's going on in options trading. In this case, it's SPY, but it is sectioning off particularly the multi-leg trades which people are entering orders because they want to do a certain strategy. So you could enter in a single leg trade. You could say buy or sell call. You could also enter in an order, a complex order, such as a call spread, put spread, butterfly. And this gives us some insights into what's going on in those multi-leg trades. So here we see in SPY what the software did. Now, one thing to mention before we get into it is that when we analyze data, right, when we're looking through data in the options, particularly, the raw data is massive, right? So considering in options, there's much more data coming in than in the stocks, and that's because in SPY, when you have a stock price, you have, you're just it'll update. SPY will update the stock price, but every time SPY is moving, you have lots of options on SPY that are moving along with it, right? Calls, puts, different expirations, different strikes. You have trades on different types of options, and just here alone in SPY, I think at this point, I'm just going to go here to the order sentiment here. I think that the volume in the options in SPY exceed the volume in the SPY itself, if we had to convert that to all delta, right? So that's how active, just the SPY options are. And when we look at the raw data doesn't really give you insights. The raw data is just, here's a trade, here's a price, here's a volume, and so forth. But once you get that, the hard part starts. Okay, well, how do I put that into a database? Then how do I organize it, clean it first, and prepare it for analysis? And then what kind of analysis should I run on it? Right. So that's because I think some people, they think that well, as long as you get the data, you can analyze it. But how do you analyze the data? Right. And that's the really important part, because that's the only way for you to, get a deeper insight into what's going on. So once you get the raw data, then you have to slice it, categorize it, and start to analyze it. So how do we get to these multi-leg trades is that we took that raw data, right, and had to run it through the software to stitch together the different types of strategies. Well, first we stitched together all the related options, and then we had to run it through the software to identify what we think is the strategy, and then we had to group them together to get this report. So this is for March 27th, and here we have a filter, and here we have the data, and you could keep digging deeper and deeper into it. But if we just open this up, this filter itself is kind of a report, right? Because it tells us how many options were involved in a multi-leg trade, how many were actually entered and traded as a multi-leg. So we could compare that to the total value up here, total volume. We could see how many unique combinations of different spreads. So you could see over 7,700 different combinations of multi-leg trades, which shows you that a lot of people are using multi-leg trades in SPY, right? So it doesn't represent yet the majority of the options volume, but there's a decent amount of volume and a lot of different variations of multi-leg trades here. So then we could go to the breakdown and say, okay, well, what are the top strategies here? Well, yesterday, well, what were people using it mostly for, right? The complex trades. So then we have it organized here by the top strategies that we identified. And we identified 64 different strategies so far. So let's open that up. And we see that put spreads made the top of the list. So 297,000 contracts out of 881,000 were tied to a put spread. Okay. And there were 1,730 different put spreads that traded in SPY. What does that mean? Well, put spread could be different expirations. It could be a different combination of strikes. So every time you have a different combination, that put spread is unique. It could be in the money, out of the money, at the money, leaps, short term, but there are different types of combinations of put spreads. And you could see here, it wasn't one big one or one that was particularly targeted. There are over 1,700 different combinations. And if we just wanted to see those put spreads, just to see if any of them stuck out or if there was one really big one, we could click on it and just filter this report by put spread. So I could click on that. And now we see all the put spreads down here. So here's 174,000, right? So June 21st, it was the 494, 498 put spread. So you can see this has 86 days to expiration. Over here, it's a $4 put spread, and it traded for a VWAP price of 50 cents. And this traded actually at between 403.37, 405.46. So right, after the close, actually, well, I think SPY trades till 4:15, but after 4 o'clock, right? So this particular one, the biggest put spread that traded yesterday in SPY was after 4 o'clock. It's up here. And you could see, just as comparison, these are the top 5. We could keep tabbing through all of them. There's 346 pages of them. But you could just see the top 5 by volume, how significant this one is relative to because you see how they drop off, right? From 74,000, next one's 13,000 contracts, 10,000, 10,000, 8,000. So from that perspective, it was a pretty significant, large put spread here. And we could just click on it. And when we click on it, we get more details. So up here this is the market where yesterday it stopped. The market was 46 cents, 51 cents. So you could see 50 cents is kind of still in between the closing market there. Last traded at 48 cents. So if we see there are two trades here. Here, 4,337, 74,000 contracts, 50 cents. And the market was 45 cents, 49 cents. So it actually went even above there. And these are the different, these are all the trades associated with that spread if we open it up. And if I open this up, right, now I get a little bit more information about the open interest too. So what happened here was yesterday traded. So here's the volume in each leg, 37,040, 37,040, right? That came up to the 74,080 total contracts. And we could see that the open interest started out at 37,230 for the June 494 put. And on the beginning of yesterday, and it started out at 2,759 in the 498 put. So what does this tell us is that we could now compare it to what's today's open interest to see the change and to see if we could get some insights what may have happened in this put spread, right? Did open interest go up by a significant amount in both of these legs? What would that indicate? That would indicate that there's a new open position, right? That if it went up by a significant amount that's close to here, then that would indicate, okay, somebody opened up a new position. If it went down in both legs, that could indicate that somebody closed the position, right? That they had it on, they closed it, and went away. So in this situation, as we're looking at it, what we see is that there's a decent amount of open interest that declined on the 494 put, and a decent amount that increased in the 498 put. Now, without going to see what, we could see what else traded on those particular legs, but just looking at this alone without, digging deeper, we can make an inference here that it looks like this put spread was somebody perhaps rolling a position from the 494 put to the 498, right? So what does it mean? Well, if you're holding the 494 put and you're saying, okay, I'm going to close out of this, what would that mean? That the open interest is declining, and I'm opening up a new position that I don't have. So I closed one, and I'm opening up a new position I don't have in the 498 put, which increases the open interest. So just looking at this alone, and trying to make an interpretation is that on the surface looks like that's what most likely happened. We could go look at more of the volume on these legs, but just judging from the sheer size of this, that's probably what happened in this particular spread. Okay. And this spread did trade two more times here. We could see. Let's take a look at history. So historically, there's this particular spread traded twice, but at very low volume. So here, and it could have been just a person, that they just owned this put outright from accumulation, just rolled it up. So these are the different insights we could gain from looking deeper into the data. I'm going to close that, and then let's come back to the alt. So these are now filtered by all the different, so you could tap through it, but it's showing the top 5. So that put spread is actually, as far as volume goes, that was the busiest spread yesterday. The next one, 42,000, that involved a calendar double call spread. We can take a look at that. A call butterfly, a call spread, 15,000. And then this one, we couldn't really identify or give it a name. So we just, named it a combo. But let's look at this one, because this one involved 4 different legs, right? You could see traded 99 times yesterday. So traded all the way from 139.08 was the first time we saw the trade to 224. So let's open that up. And now we see how each of those 4 legs, these are the volumes, 10,600. These are the open interest before, these are the open interest after, and these are the changes. So here it's a little bit more difficult to see, but let's just using logic and inference, that there was significant open interest in the April 524 call, April 2nd 529 call, and it's close enough to this volume, which my first inference is, okay, that's a new position that opened up. And we could look at it deeper, but just from that alone, that's a logical conclusion. Here on the March 28th, we didn't see a big open interest change, maybe here, 3,000, but my assumption is that because these are 1 dates to expiration, 0 DTs, there's probably a lot of other stuff going on there that meshed in that is blurring, what may have happened with the open interest due to this trade alone. But, just looking at it, it does seem to me that this is a roll up because we don't see open interest just increasing on all of them. And this one's probably slightly decreasing, which it looks to me, if I had to make an initial guess, is that you're rolling, right, a spread March 28th, 524, 529 to April 2nd, 524, 529. So similar to what we were talking about, a roll between one option to the next, what we're seeing is now a roll from one spread going out to a further out month. So what do we see the first two? The first one involved a roll from one strike to the next strike in the same expiration. The next one involved a roll from one expiration to a different expiration, but same strikes, right? So one was different strikes, same expiration. One was same strikes, but different expirations. So, and I'm going over this exercise right now, and I'm just kind of, the first two, and we could get on. But why are we going over this exercise is that now we're painting a picture and getting more information about how people are using options. How are they trading these options? So as we build up that knowledge base and we start seeing patterns of behavior over and over, you're starting to anticipate order flow, right? Anticipate what may have happened, anticipate what may have happened as we get closer to certain expirations and with open interest. So so that's part of building yourself, the knowledge base of how people are using options, how they're trading options, and what are the tendencies, the behaviors and patterns within a particular stock symbol, right? Because not all of them are going to be like this. But if you're going to trade it, you want to know it more than, anybody else, any other competitor out there, right? You want to know what's going on, how things typically trade, what typically happens, how people typically roll, and so forth. So that's why we're just kind of going through this exercise right now, just to learn that even the top two, right? What are the top two tell us is that it looks to us that these were both positions that when that are just moving either to a different strike, or to a different month. So it could be just a continuous roll in positions. Let's look at the butterfly. That traded 20,000 contracts. So let's see what happened here. So here, this is interesting. What we look at, again, we're just looking at the open interest. So here's the volume in each leg: 5,000 in the April 535 call, 10,000 in the April 540 call, 5,000 in the April 545 call. If we just compare that to the change in the open interest, right, it's very close. Obviously, there's other stuff probably going on there, but that's very close, which now indicates that this is a new position, right? So somebody opened up this new position in this call spread. In this call butterfly spread, right? Around the $5, 535, 540, 545 call spread, right? It looks like if we just compare the bid and offer, it looks like this was somebody bought that, right? Here are the different legs. So in this spread, this was particularly somebody, right, looking what would be the target price here if you're buying them. This is an out of the money call spread, right? The stock is 523, and all these are out of the money, and the sweet spot for 37 cents, the sweet spot is $540, right? That's the sweet spot. Because if it goes from 535 to from 523, whatever it is, to 540, well, this spread will be worth $5 that you paid 37 cents for, right? Because that's the sweet spot of a call butterfly, right? If you're buying it. And of course, that if the closer it gets to 540, the better, right? So it does have a delta. It's going to, as between now and expiration, if it gets closer. So really quickly, what do we do is just in these few minutes, we were able to evaluate, what happened in the three biggest multi-leg trade in SPY, and we could just keep going down the line that way, right? You don't need to, it's not, even though there's 1,557, you're not going to analyze every one lot, but these are the major ones to get an idea how people are using these options, what kind of targets are they, and if you do this every day, you're going to get used, you're going to start seeing the patterns yourself, right? You're going to start seeing, because what are traders know their products, traders know what typically happens, they know how things trade. And if you're doing this exercise day after day, you can go back days, you start to learn your product, right? And what this could mean, what usually happens, how people roll. So we're up at 9:30, Will. I think I'm going to stop there.
All right. We had a question from Rob that I'll send to you, and we'll look at it on Monday concerning volatility. Awesome job, Dima.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day. And what did you say? Hope to see you guys.
I was going to clarify Friday, tomorrow.
Tomorrow. We open
Yeah.
tomorrow? Yeah.
Yeah.
Okay. Yep. Okay. So, yep. Hope to see